Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to another weekly video insight. This week I want to talk to you about the dilemma that we're discussing in our company. On the one hand, it looks like the market's expensive. I ran a scan this week that I run infrequently, but I like to do it when I think or suspect that we might be at a turning point in the market. That scan's a pretty easy one. I look for A1 or A2 businesses that are trading at a discount to intrinsic value. I then look for businesses that have net cash, rising earnings per share, and rising expected intrinsic values. When I ran that scan yesterday, two companies came up on the list, Decmil and Hawkley Oil and Gas. Now, we already own some shares in Decmil. We don't own shares in Hawkley Oil and Gas, but the interesting thing that it tells me is there's not a lot of companies that are cheap right now. Having said that, the last 3 years that we've performed that scan, each time that that's occurred, where there's only been 2, 3 or 4 companies that meet the criteria, it suggests that there's a whole bunch of companies that are expensive or poor quality. And that could mean a correction in the market. And indeed, in the last 3 years, that's exactly what transpired. But when we take a step back, and Tim Kelly at our office has done some analysis of the average or mean intrinsic value, or margin of safety rather, the mean margin of safety, going back to well before the global financial crisis, to take into account the rally prior to the financial crisis, then what we find is, sure, in the last 3 years, the strategy that I've just described works very well at predicting declines in the market. So what does it mean? Well, here's what I think it means. It means that on an absolute basis, maybe companies are expensive. But on a relative basis, relative to the levels of margin of safety that we've seen in the past, what we're seeing is that companies aren't expensive at all. That on a relative basis, they could rally much further than they've rallied so far. In any case, we're not behaving this way. We're investing and continuing to invest based on companies that meet our criteria, and when they do, buying them. We're not trying to predict where the market's going to go, and I don't think you should either. But I'm interested to hear your thoughts. Make sure you follow us on Twitter and Facebook. Leave your comments here at the blog about whether you think the market's cheap or expensive, and I look forward to answering them and seeing you next week.